tariffs are still not impacting inflation. It's not been a week or two. It's been, a couple of months. So May Consumer Price Index showed little impact from the tariffs. Headline CPI came in at 2.4%, which was right in line with expectations. And core CPI, which excludes food and energy, came in at 2.8%, which was actually below the expectation of 2.9%.
Yeah, and you got to understand here, the headline CPI continues to remain softer than the core CPI due to falling energy prices. Compared to last year, energy prices were down 3.5%, and gasoline in particular fell 12%. Now, maybe that's going to change in the June report. We're going to have to see how this Israel-Iran situation shakes out, because we did see a huge surge in oil prices.
I mean, 7%. Did I say that?
Yeah. Crude oil jumped 7%. Right. I think at one point it was up 8-9% on the day. I mean, it was a huge increase. So that could actually be a hit to headline CPI when we see it in July. But we'll kind of have to keep our eyes peeled to see, because then all of a sudden maybe core will look better than the headline.
And I wonder if they include California when they see that decline, that decline in the CPI. Because California, I don't know about you, but I have not seen any decline. And we've talked about this. We won't go into it, but the refinery costs, I'm still paying the same thing I was for gas, I think 2-3 months ago.
And we had a great post on it this week just talking about how California is importing something like, I want to say it's like 425,000 or somewhere along that. Long story short, it's a good amount of barrels of fuel from Asia, because we have no refining capacity here. And not no refining capacity. We have little refining capacity. Right. People are, no, we have a couple of refineries. Yeah, you're right. We have a couple of refineries, but they're leaving.
They're leaving. Yeah, they're leaving. So the core prices do remain a little bit stuck at the 2.8% level, considering it was that level both in March and April reports as well. But considering the concern around tariffs, I would say it's a strong report, because everybody thought wait till the tariffs come. Yeah. You're going to see inflation skyrocket. Well, here we are now for 2 reports that there's still no really major sign of inflation. And we do see dollars coming in to the federal government on the tariffs.
Yeah, I mean, it's interesting. And then also PPI, Producer Price Index, that also came out this week, and that was still pretty strong as well. Core PPI was actually 3%, and that was down from the prior months at 3.1%. And then the headline Producer Price Index was actually 2.6. So again, we're seeing inflation rates that aren't overly concerning. Now, one thing that does make me wonder is, if we don't see the inflation rates, is that going to hit corporate profit margins as time progresses? Because somebody's going to have to pay for these tariffs.
And remember, we talked about, we think that was going to be shared all along the line. The transportation company, the manufacturer, the salesperson, everybody's going to share in that. So, but I think you're right, though. There has to be some hit somewhere from somebody.
Yeah.
Economists.
Yeah, economists. I mean, that's another one that I think has kind of been proven to be a little bit wrong so far. And one thing I will give them credence on, and I've kind of been wondering the same thing, and they pointed to the fact that companies, they brought in excess inventory before the tariffs were implemented, so they are still working through pre-tariff levels and have not necessarily needed to raise prices yet. The other thing I kind of look at here is it does take time for companies to change their policies and maybe lift prices. So, I mean, there is some potential delay. It's not like, we've gotten through it. We've definitely seen no inflation from these tariffs. I want to be very clear on that. It's still very possible we could see inflation rates increase over the next couple months, because it's just taking a little bit of time to work through the system. But the other thing I was reading from another economist is maybe we won't. And this is where it could be hit to company profit margins. There could be a lack of pricing power, because consumers are tightening their belts and say, well, if you increase prices, let's say 10% for simplicity, I'm not going to buy that anymore.
Right.
Or if there's a formidable competitor out there, they're like, we're not going to raise our prices. We're going to steal market share at this point in time. So it's very interesting to see how this is all going to play out. We're still very early on, but so far, not much noise, I'd say.
And I got to wonder, if inflation does not substantially increase, at what point will economists say that the tariffs, maybe aren't as impactful as they once thought? And I do wonder, we're in such a political environment. I think if somebody doesn't like the current president, or like the current or the past president, whatever, they will go against that person, as opposed to trying to be unbiased. And it's very hard.
Yeah.
But I think a lot of the economists that are saying, it's not going to work, they're against the current administration. But there's other ones out there that maybe say, yes, this is good. I have seen those as well. But it seems to be more on the other side where they say it's not going to be. Maybe they get the most press. I don't know.
Well, a lot of the media maybe does not like the current administration, so
that never happens.
they're publicizing maybe more of the economists that are saying the negative things. And I want to be very clear. My personal viewpoint: inflation is not going down because of the tariffs.
Yeah.
But there are other things that are kind of working through the economy. You have to remember, again, we went through a very difficult supply chain change after COVID that created a lot of these issues. We saw a lot of money coming in from the federal government, so you had too much money chasing too few goods. That's why we saw such crazy inflation. That is subsiding. So even with these tariff changes, you still have positive forces on the inflation front that could maybe counteract some of the inflationary pressure from the tariffs as well. So I think it's very possible. I mean, maybe inflation goes up to 3% on the CPI, which to me is not that bad.
The only problem is then the Fed won't reduce rates.
But if it's temporary, if it's transitory on the other side, maybe.
Maybe, yeah. Transitory. Yeah, that word came out, 2022 was
And I'm talking CPI too. I mean, PCE, if maybe PCE stays around 2.5%, I'm not sure. I mean, it's going to be...
Because it shouldn't have an effect on shelter cost, because shelter costs...
Yeah, I mean, you could argue the fact, obviously, you're going to have lumber costs and everything else that kind of gets tariffed within the home that would drive up the cost to build a home, so that would have an impact on prices. But as we've seen, home prices haven't accelerated, and shelter costs have been a very heavy weight on this report. Well, if it now all of a sudden maybe shelter dips down to 2% and is no longer pushing the CPI higher or the PCE higher, yeah, maybe it actually helps reduce that even with the pressure from tariffs.
And you got to remember, the CPI, there are thousands of items in there, not just 5. Say, oh, it's not true because mine this and so. There's thousands of items in there. And do you remember how they calculate the shelter costs? Remember, they changed it. It's like a terrible way of doing it. Do you remember how they do it?
They have 3 or 4 different survey groups that they'll look at. So you're not even comparing the same group each month. So it's going to take time for that to actually lap compared to the previous year. I mean, it's
based on rents. Remember, it was based on rents, or the equivalent rent, I think is what they call it.
Yeah, so it's rents and then the owner's equivalent rents. So if you're renting an apartment, I mean, that is going to be factored in the CPI. Right. But if you own a home, the price of your home is not factored in the CPI. No. It's what could you rent your home at?
Right.
That is what is factored in the CPI.
So.
And as we just kind of said, somebody thinks their house is worth 1.5, but the market only dictates 1.2. People generally think their home is worth more, and they think they can rent their home out for more than what they can actually get.
My home is always worth the most on the block.